All right. Good evening, you guys. We are back with another backtesting session where I'm going through a week's worth of data. All right. So, hold on. All right. Trying to make sure my display captures right. All right, so here we go. So this is as you guys can see, this is Tuesday the 18th, June 2024, and so I'm going. This is like behind the scenes. This is like what I do at night whenever I get off of work. So like Friday and Saturday I have to get overtime, so those are the 10-hour shifts. Monday through Thursday are the 8-hour shifts, or it's like 7.5-hour shifts. So taking my trading to the next level, right? Every single trade is going to go through a confirmation 5 levels of confirmation, and that is manipulation, displacement. All right, and so whenever we manipulate and we displace, or here, whenever we manipulate, we generate liquidity. Okay, so that's the key point of manipulation. Whenever we generate liquidity, what do? We displace. That's why these concepts are not they're universal. Any pair that you trade, we're going to generate liquidity, and whenever we do that, we then displace. When we displace, we have price action, and whenever we do that, we can judge that with context, and then we have to say, okay, is this trade valuable? Am I going to take a 1-to-1 risking 20 points? Probably not on 90% of the trades I take, right? So that's manipulation, displacement, price action, context, and value. If it does not hit those five confirmations, then that is not an A+ setup. And whenever you hit those, you guys are going to see. All right, so let's go, right? So going off of this Thursday, I was looking at taking an entry right here, but I did not like the price action, right? Because we manipulated. So this candle saying, hey, we don't want to go down anymore. So we attracted buyers, and then as soon as we close below, that is bearish signature. Okay? Any confluence of bearishness is a bearish signature. So that's what we did, right? Obviously, we have manipulation. We then displace, and I did not like the price action. So if anything, that's 4 out of 5. That's not an A+ setup. And then context is we have our draws on liquidity. I was targeting for this fair value gap. It looks different on the 3-minute. And then I measured this whole entire price leg to see if we could retrace back to equilibrium after we have taken out buyers, right? So all the people who did this right here are taken out by this candle. So this whole candle snatches liquidity and also generates, right? So that's context. And then value of this trade. This trade was valuable, but I didn't enter, so I'm not going to think about it. So we're at 11 o'clock on a Tuesday. I'm not really looking to take any more entries with what I've been given. But with that being said, let's just watch until maybe 12 o'clock. Okay. So we do not have manipulation and display. We only have just displacement. Okay. So let's see what we continue to do just to see if my trade idea pans out to my draw, which is this 50% equilibrium of the price leg. Now I would love if I could post like 3 videos a week just on me back testing to show you guys the behind the scenes, you know. What is it to? I know that clicking of my mouse gets kind of annoying, but so it is now 12 o'clock. All this is garbage. Price action, I don't like that at all. And plus, if I was to enter right there, it's 9:39. I know in this case scenario, it's whatever, like that could have been an entry, but I don't place trades from 9:30 to 9:40. Why? Because my back testing has shown me that is a bad time for me to enter. So 9:40 and after, really 9:40 to like, I'm only gonna watch until like 12 maybe. Today on the video I uploaded, I watched until like 11:40, but that's because I was managing my trade. So I am done looking at this for Tuesday. Okay, so on this specific trade, we had manipulation, we had displacement, we had no good price action, context. I would say that that's there. And the trade was valuable. So that is 4 out of 5, right? That's 4 out of 5, and every single trade that I take is going to have to go through this 5-step gauntlet, or that's the criteria. So then I'm going to write down Wednesday. Let's go into Wednesday. Okay, so now this is Wednesday, the 19th of June, 24. We're going to have manipulation, displacement, then price action, context, and then value. All right. So let's go 8 candles. 1, 2, 3, 4, 5, 6, 7, 8. So it is now 8 o'clock. I don't think I want to see this anymore. So I'm going to clean up my chart. So what is apparent to me right here, or what am I really wanting to aim for? So equilibrium and above, we have retracing this fair value gap. This candle saying, hey, we want to go up, which we don't want to go lower. This candle saying we don't want to go lower. So my bias is going to be, we're going to create all-time highs. That's going to be like our draw. Plus we have relative equal highs right there. For the ICTers out there, what does that mean? What's resting above that? water. That is liquidity. We have liquidity resting above and we have liquidity resting above higher high or relative equal highs and below relative equal lows or equal lows. So then I'm going to go to the 15-minute. And you guys, it's going to get boring. It's just repetitions after repetitions after repetitions. Thursday's going to come. I'm going to write down again. And I'm just going to constantly just keep doing my checklist. And I want to go through a week's worth of data every night. Because I feel like it's better to take trading week by week. Not day by day. So on the 15-minute, what do we have? We swept liquidity right here. And then we went up. We came down, took out all of these wicks to proceed higher. So my bias is going to be, this is a Wednesday. I don't know the news drivers that are going on. So let's just say 100 points above, and let's say a maximum of like 100 points lower, right? So I'm only focused on where we're going to go today. I'm not going to come out here and say, oh, we have this fair value gap that we're going to reach today. We have this bigger fair value gap we haven't reached today. No. Odds are you're going to move maybe 150 points up or down depending on the context, right? So let's see. So that's going to be like my overall maximum draw. So let's see what the 930 candle does. Bullish. Okay. So we haven't really manipulated or we didn't really get a clean range, so I'm just going to watch until 940. So now we have manipulated because we have closed above this range and back below, and it is now 937. So now it is 940. It is permissible to take a trade. Okay, so we have manipulated higher. And we do have a lot of stacked lows right here. And anytime you're looking at a group of wicks, you want to go with the median. So like this will be the low. This right here will kind of be like, maybe right here is the high. So this is kind of in the median, which is this wick right here. Not that important, but in that ballpark, right? So let's see what we can do from there. All right, let's see if we can have a 1030 news driver. All right, so these are the lowest two connecting bodies right there. So let's see if we can displace Alright, so those two candles right there were displacement. We have manipulation, we have displacement. So that is 2 out of 5. Alright, the right context, we are going bearish. So my context is there. And if I were to take something like this, I would say that is a valuable. Well, I don't know, because low volatile, right? We're risking 7 points to make 20. So the value is iffy because you would have to risk more contracts. And it's not looking like this is a big volatile day, and I do not like the price action. So let's see what we can do from here. We've now swept and we've closed above, so for the time being I am bullish. Alright, now we do have a little bit of displacement. Let's see. So given context, it is 11:10. So this candle right here is telling me, hey, we don't want to go lower anymore. So let's see if we can get a bullish move to the upside, or if we can manipulate this range, go up and then come down and try to take out all of this. But given context, it is still a low volatile day. Alright, so now we have manipulation to the upside. Let's see if we can displace. Don't like that price action. That's not appealing to me. That doesn't tell me, hey, we really want to move down lower. Okay. So we had manipulation. We had a failed push. And then that is followed with displacement. Okay, so let's see what we can do from here. Alright, so it looks like we gained a lot of liquidity from this manipulation. So we manipulated down, sellers got in the market, This is taking out stop losses, and now we have generated liquidity because we have now swept this high. So what we did was we manipulated down to try to get more sellers, and then bam, there's our move. Okay, so I would be looking at a trade something like this, risking 7 points to make 24 points. Alright, that's not that valuable to me, even if I am risking 15 contracts. And the price action is still not as well. Plus, it is 11:30. Alright. So it looks like that we could push a little bit higher. I just want to kind of look on the 3 minute to see. Filling in fair value gap. Bam. Alright, so what has just happened? And guys, realize why I did not actually take that trade, because yes, we manipulated down. Yes, we have displacement. We have somewhat good, really average displacement right there. That's not indicating to me a big push. So manipulation displacement is there. I did not like the price action. The context, I'm kind of aiming for bearish now that we've closed below the range. But for that time being, the context would have been bullish. The trade is not valuable. So the price action was dookie and the value was dookie. So that is 3 out of 5. Trading these prop firms, it is an A+ entry or it is an F entry. If it does not hit those 5, then it is an F entry in my book. Alright, so let's see what we did. Price action looks dookie on the 3 minute, and on the 1 minute it looks decent. Looking at those two candles, aiming to take out maybe this or this right here. So maybe if we have a pullback to here or even here, that would be a little bit better. Price action is terrible, and then it's 12:15. I'm not looking at this anymore. Alright, so Wednesday, manipulation, displacement, price action was not good, context was not good, and the value really was not that good. Because context is given the news for that day, given the volatility that day, expectancy of bullish or bearish, all of that is context, and you have to have all of that aligned. And you guys don't pay attention to this negative $6,900 because that's not real. That's me testing things. You know, it's not like, I mean, dude, I could go to another file to where it shows that I'm $12,000 up in 1 month. Don't keep your eyes on that. That's not here. We'll go over the numbers after the week, you know. So we're gonna go to Thursday, and I started off on a Tuesday, so we're gonna end on a Monday. So Thursday we're gonna have manipulation, displacement, price action, context, and value. So those are the 5 pillars. So it's going to be Thursday the 20th June 24. All right. So there is the new all-time highs. What is this for? All right, so we've now created all-time highs. So we now have a new array. All right, so what is standing out to me right now? I'm expecting higher volume. Because pre-market we're having 30 point and 20 point candles. So technically you could say that we're oversold to an extent, hypothetically. We swept highs, which gives us room to manipulate and to then generate. So we have swept this gap. I'm not looking at that anymore. So with the context, that gives context that we can then expand 200 moves instead of expecting like 150 to 100 point move. All right, so our draws are going to be somewhere in that range. So then we're going to go to the 15. And this range right here is going to indicate to me, okay, we've swept on a bigger bigger time frame, on a higher time frame is what I just tried to say. So let's see if we can sweep and then go below. All right, I just want to kind of keep that in mind. Now 15, we have swept below. So if we are bullish, or I'm sorry, if we are bearish off the 930 candle, that's going to indicate to me, of course, we're going to want to continue going down. So it's 927. That is the 930 candle. Okay, great. And we don't take trades from what time to what time? 930 to 940, or 930 to 939, or I've taken a lot of trades at 941 and 943. Those are good times. So let's just see. Let's see what we continue to do. So it is now 942. We could definitely enter a trade now. All right. So I just wanted to kind of use that line as a benchmark. I'm kind of done looking at it because now we have ranges that are displaced. So we have completely gone through that range. Let's see if we can close below. Alright, so we have manipulated, we have displaced. I like the look of this price action. And if not, or let's say that it's not the best price action, the precautionary measure would be to enter off of a pullback, preferably to a fair value gap or a good looking order block. I don't really like to take entries off of order blocks, but if the context is there, hey, that's fine. So that is 4 out of 5. And then let's say, all right, cool. This trade would be valuable because I'm risking 25 points to receive a move of 106 points. So let's just see the next candle. All right. that price action is not clean enough. So that is 4 out of 5. That is not an A plus entry. Let's see if we can do something else, right? So we have respected this fair value gap. That is bearish signature, more confluence on taking a bearish trade. The narrative right now would be, listen, I never do this. I never ever go off of trend lines. But just for the visual learners out there, like, hey, we are still bearish narrative. We're under the EMAs, whatever, right? Do whatever you want to do to where that can point out. Like, I've trained with using no indicators, so like it's taking time for me to get to that point. All right. Still, I'm not a big fan of that price action. Let's see if we can get another displacement candle. All right. Now, what are all the emotions that I'm going through right now, right? Oh, maybe we just missed the trade. Maybe we just didn't get in when we were supposed to, etc. Right? So let's just draw that out. Wow. So, 99% of the case, right? 70 points, 1 to 3 on a Thursday. That right there is a beautiful, beautiful trade, right? So let's look at the EMA to see if we could have stayed in this trade longer. That's a 100-point move. All right. So now reflecting and going back over it, that price action, even on the 30-minute, it doesn't look as well. So you have to say to yourself, man, was that an A plus entry? And for me, it wasn't good enough. You know, that is a 1 to 4.6. So then you have to ask yourself, man, is that good price action? If it is, focus a couple seconds right here to establish that in your brain, to literally tattoo your eyes. This right here is permissible. Just focus on that for a couple seconds, because hey, this price action was good in this case scenario. Maybe it can be good in other trades. You know, maybe I just missed out. Okay, because we have manipulation, we have displacement. This price action right here, I'm gonna say, hey, for this case scenario, I missed out on a good entry. This price action was good enough. Okay, so I just missed out on a 1 to 4.7. So kind of managing the trade, it is better to hold on to the trade if it has hit or gone lower than your intended target. And let's say, we just crossed over right there, and let's just say the candle closed. All right, that's 80-point move, and that's still a 1 to 3.5. You know, so let me journal that. Hey, there was manipulation, displacement, the price action. I didn't like it at first, but now with me reflecting over it, that would have been a good entry. So that is a 5 out of 5 trade, and I just missed out on the price action. I've still got to get used to that type of price action, especially with the context given. So I'm going to journal missed entry, due to recognition of A plus price action. And it's like, bro, don't go into this guilt trap of saying, oh, well, I'm gonna miss that next time, blah blah blah. That's why you're backtesting, bro. That's why you're backtesting. These concepts are universal, and next time I will recognize it. So let's just see what we do from there, because it is only 10:30. We don't know if there's any news drivers. Let's see if there's another opportunity. Alright, so now, maybe on like the 30-second chart, we have clearly displaced below and we have closed above. You might not be able to see it on the one. There we go. That's why I'm so OCD. Like, sometimes you guys will be seeing me trade and I just try to get the crosshairs like on the horizontal and vertical lines. Like, I'm so OCD about this stuff. So this line right here was perfectly closed below and closed above, which is indicating to me, hey, we could easily continue to go up because we have sweat liquidity, etc. So let's just continue to watch for a second to see if there's another opportunity given to maybe hit my other draw on liquidity, right? Alright, so what has happened here? We failed to manipulate strongly, right? And also, we have failed. No, we hit equilibrium. So, given that context, that is bearish signature. In this price leg, we have retraced to 50%. A lot of people are selling in at that point, and we have another decent price action formation, but still, that is not good enough for me. Not yet. And if it is, then let's see if we can displace and pull back. Price action, bam. Alright, so we have now hit that fair value gap. Let's see what happens from here. Bam. So these 5 pillars might not be, you're going to have missed entries, whatever. But going back to the discipline of having the confirmation checklist is going to save your career when you're in a rut, when you have lost back-to-back trades, when you have won 20 trades in a row. Okay, that's the precautionary measures of not spiraling. If you take a 4 out of 5 or a 3 out of 5 trade, that is outside of everything that you have put together. Alright, so let's see what happens. It's now 11 o'clock. We have expanded past equilibrium. So we are now in a premium. I don't know. Alright, so let's just see what happens from here. So we have gone below. We manipulated, we have gone below. Now we have broken that. So let's see what can happen from here. So I don't think it's permissible to say, hey, we manipulated and then we displaced, because that's not clean displacement right there. That's choppy. I don't like that. That's low volatile, whatever, right? So let's look at it on a 3 minute. Okay, so we have completely manipulated. People bought in right there. We have closed below this range of the two highest connected bodies on the 3 minute. And we have one candle, two candle, right? So I like that price action. I don't think the context is there for this specific trade, so let's watch. Okay, so we have now came up. We have respected a fair value gap. So this would be like a pullback type of scenario, right? So we are still going with the trend. We are still all right. I like that displacement better. This right here would be another A plus entry. Alright, so let's just see what happens from here. Bam. So that's 2 missed entries for the day. Alright. If I would have stopped right there, I would have probably entered right there, because I like that displacement. We have manipulated, which means we have generated enough liquidity. So that is two possible entries for the day. That is a 1 to 4, and this right here is a 1 to 3 2. And you could have just went for somewhere around here to say, hey, we're gonna blow past that. So that's still another 1 to 3 that I've missed out, right? So let's say that you still held on to it and you're going for the other drawn liquidity. Let's use or just watch our indicators to see how we can better manage this trade. Bam. That just went to take profit too. And so you would not just let this trade hit your take profit. You would move your take profit down to see where we would cross the moving average. That would be more of a better trade, or however you want to do it, right? So we did not displace through the moving average, so let's just say that we're still in this trade. Or you could get out right here. Either one. 169 point move, brother, please. That is phenomenal trading. Alright. Boohoo, we cross over the moving average. It's a 140 point move. Okay. So, just like I was saying, this is another A plus entry, and let's just say I want to focus on these 2 to 3 candles right here to say, hey, this price action within this displacement is permissible for next time. This price action is permissible for next time. I'm more of a fan of this right here. That is an A plus entry. All right. So dude, that is a 1 to 6.3 risk to reward. That is phenomenal. For most people, that is plus 6% in a day. That is $6,000 up on a $100,000 account, and that is up $3,000 on a $50K account. Okay, and if you're risking 15 lots, you would do 140 points times $20 per point since we're trading NQ, MNQ, and then you would get a number and you would do that times 1.5, which is your lot size or your contract size, whatever. So we're completely done for that day. All right, those are two beautiful, beautiful trades. We have now taken this gap, and yeah, we're just saying, hey, we missed two very good opportunities, and that's gonna happen because it takes time for you to become that type of trader, you know. So now we have a Friday into Sunday. That is a new week opening gap. That could be a draw on liquidity now. I'm going to move this fair value gap over here because I don't want to see it. And then I'm going to move this line right here. So, are there any other fair value gaps that are looking good if we, let's just say, if we went to the upside, right? So we have fair value gap up here and up here. That would mean that we would have to expand 255 points. This is a higher volume day, etc. So now this is Friday. Let's go into Friday, June 21st. $2024. And then we're gonna have 2, 3, 4, 5. Manipulation, displacement, price action, context, and then value. Okay, we have fair value gap up here and 2 up here. Let's see how that looks on the 15-minute. So this right here, I'm basically combining 2 fair value gaps together because there's a gap here and there's a gap here. Then we have new week opening gap right here. So let's just see where we go from there. $9.30 candle. All right, so let's see what we do from here. All right, so have we really manipulated market open? If so, it was right here. So let's watch until 9:40. 38, 39, 40. All right, so what I'm seeing right here is we have not really manipulated to the upside. So let's see. Bam. We're looking to expand possibly 158 points. So this is manipulation to the upside. This is displacement to the downside. We come up and we respect this fair value gap. And then we continue to close. Alright, so in my mind I'm saying, hey, we are now tanking. Let's see if we can retrace to equilibrium and get another possible entry. So have we done that? Yes, absolutely perfectly. And also we have respected this range so far. Alright, so we have now closed above. Alright, so note that this is a Friday. This is Friday's volatility and price action. This is not a Tuesday, Wednesday, Thursday, which are my hot days. So now we have closed below the range again. Let's look on the 3-minute. This is more key manipulation. Since it is a Friday, I do not think that we're going to go down another 156 or 150 to 160 point move. So let's see what happens from here. Alright, so we have closed below this range. We have manipulated sellers. So now we're looking for buy opportunities. Do I like this price action with this context? Yes. But, alright. I don't like this trade because of the context, so that is not an A+ entry. Let's see if we can keep expanding or displacing. Would you get out after 40 points on a Friday? Or would you get out after here on a Friday? Absolutely. You know, this is just, let me see. So look at it like this, right? We displaced. We have now swept this wick right here. We have not. Bam. Alright, so that is another opportunity. That's alright, so we manipulated this range to attract sellers. We then take that out, so now we displace because there is liquidity generated. So let's just say that that's another missed entry. Okay, so that is 3 missed entries for this week. I'm gonna go over Monday on my own, but yeah, that is basically what I go through during back testing. So yeah, I just wanted to share that with you guys, a little behind the scenes. So I'm gonna post this video and maybe I'm gonna go through Monday, but yeah, those are at least 3 possible entries. So yeah, that's gonna be back testing for tonight. Hope you guys have a good one, and peace.